Yes, I think we're seeing obviously a lot of volatility in the market at the moment, and we will see Italy start to trade a little bit wider on the back of this because there is some arguments going on within the EU. But remember, we still have the ECB is buying all of the debt across Europe, and they have pretty much said that they will buy more and more and more. And so I think that that is actually the big backstop that we need to be aware of. It would be great if Europe could come together and actually issue a bond that is cross collateralized so that you have one bond for Europe. And I think we will get there eventually. I just think that there will be a lot of pressure and it will take time to work out those mechanics.
What is pushing the markets around here? Because we've had this flurry of unanticipated announcements from both central banks and fresh announcements almost by the day on fiscal policy. Very hard for markets to grapple with so much information at the one time. So what is the fundamental that's driving prices at the moment?
I think one of the main fundamentals we have at the moment is just pure fear and people just looking for a space where they can know that they will get their money back. And I think that's why we're seeing, core bonds are actually doing okay. Also, we know that it's very well supported by the ECB. And so I think from that perspective, again, people want to have something that's liquid. I think liquidity is paramount at the moment. Do you have cash? Do you have things that you can sell? And I'm not saying for a longer term investor, there are great opportunities coming out and you need to look for those. But agreed, the amount of monetary and fiscal policy is being thrown at this situation is pretty much unprecedented. And we really have to take many months for us to finally go through what does all that mean. But I think in general, the central banks are trying to ensure that markets remain open, fixed income remains liquid, so that when we do get through this virus time period, the economies can restart, because that's really the biggest point, is that we have to get the virus under control, and then the economies will need to have the financial measures and liquidity to be able to restart and start growing again, even though there will be quite a sizable hit.
David, very good morning to you from down here in Downing Street. I was very disparaging on our last show about what point rating agencies making any moves on gilts and the UK economy and the UK government debt is at this moment in time, due to the dual factors. One, you've got central banks buying every bit of sovereign that they can get their hands on, and two, as you've already mentioned, investors just want to make sure they can get their money back, hence are trying to flood the sovereign markets with putting their own money in there as well. Does it matter what the rating agencies think at the moment? If it doesn't matter now, when will it matter?
Well, I think that the market situation is incredibly fluid. So I'm not surprised that rating agencies are making movements, but I don't think that really moving from, within the investment grade area, from a AA to AA minus really makes a lot of difference to investors at the moment. If you start going from investment grade to sub-investment grade, then that is a different investor base, and so that does make a difference. But I think the agencies want to show that they are on top of things, that they are moving after that. But I agree that everything is so fluid at the moment, and the amount of spending packages coming out are so large that we won't really be able to fully understand what the amount of that is. And that is offset a lot by central bank buying. And the Bank of England, the ECB, and the Fed have all pretty much said they will buy as much as necessary to keep the economy and the markets functioning.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.